orange sheet so I can't lose it. And okay, we are live. Okay, this is Senate Finance. This is January 17th. And today we're going to take a break from education. We're going back into our own little hole here with insurance. I can guarantee you we're going to have some bills and some issues dealing with health insurance this year. It's health insurance and the financial stability of our medical facilities and just the whole community is having issues. We've also got complaints about homeowners, property and casualty. The cost of some of those big catastrophes seem to be spreading around, but there's been concern that those prices are going up. So I've asked Henry Brown over to come on up and just give us a briefing, maybe, 101 insurance.
Yes.
And then, and maybe Emily, do you know the?
I don't. I know some of you, but not everyone.
Well, maybe we'll go around and just introduce yourself.
Yeah, I'm Chris Mattos. I represent Chittenden North, Milton, Westburg, Fairfax, and Essex-Town.
Hi, nice to see you again. Senator Ruth Ray from the Addison District. Senator Martine LaRocula from the Chittenden Central District.
And coming.
Colin Chittenden Southeast. Scott Caledonia.
Randy Brock from Franklin and part of Grand Isle.
Thanks. Thank you. And I'm Emily Brown. I'm the Deputy Commissioner of Insurance at the Department of Financial Regulation. Great. So I know there's members this year, so I thought I'd just start by talking about DFR a little bit and then about insurance regulation to kind of set the floor for the slides that I'm going to go into. So I actually wanted to start by talking about what the department's policy is, a declaration of good policy, which is actually in our Title 8, our statute. And it is to the business of our organization that offer financial services and products shall be supervised by the Commissioner of DFR in a manner to assure the solvency, liquidity, stability, and efficiency of all such organizations offering financial services. So we really are the department that oversees financial services in the state of Vermont. And we do so to assure reasonable and orderly competition, thereby encouraging the development, expansion, and availability of financial services and products advantageous to the public welfare and to maintain close cooperation with other supervisory authorities. So our job is to oversee the financial health of the entities we regulate and oversee, but then also to make sure our insurance markets, and our banking markets, and our securities markets are healthy and competitive. So the department is made up of 4 different divisions. I oversee the insurance division, but there's also the securities division, the banking division, and then the captives division, which is captives you might know are just a different type of insurance, but the divisions I oversee is responsible for traditional insurance. So when you think of your auto insurance, your homeowner's insurance, your health insurance, life, that's what we oversee. All right, and now I'm going to get into sharing my screen if I can. Oops, hold on. Okay. Here we go. So I wanted to start by talking about property and casualty insurance market. So again, our role at the department is to oversee insurance companies offering property and casualty coverage. So this includes homeowners, auto, any insurance that is insuring property or liability. So other types that you might know are like E&O coverage, for instance. If you're just buying a liability policy, that's all regulated and overseen by our department. I wanted to start with some facts because I know there has been a lot of stories lately in the news I wanted to lay out that Vermont, while everyone is seeing their premium increase across the board, for all types of insurance, Vermont does have our homeowners is the 9th lowest in the country, and our auto is the 5th lowest. And this is, I meant to cite it. This is from the NAIC, which is the National Association of Insurance Commissioners. So that's the organization that all states belong to, that helps states coordinate regulation and make sure that oversight of the insurance market at the local level, but also nationally is uniform and strong.
Yeah, if I can interject.
Yeah. Oh, and please do if you have questions along the way.
Number of years ago.
Yeah.
There were complaints from the market that there were 50 different sets of regulations. And insurance tends to be financially beneficial to the state to regulate. And so the states have worked together to coordinate their regulation. There's an insurance compact.
Right. Mhm.
There is, if anyone is interested, the National Council of Insurance Legislators, NCOIL. And you can attend their meetings. I believe they do 3 a year. Until I left this committee a few years ago, I went regularly to their meetings, and learned a lot.
And what the senator fails to explain is that they have meetings in places like Fargo, North Dakota, and West Minneapolis.
True, but they used to go, they got a new set of managers. They used to go to Santa Fe and San Antonio and the Florida Keys. So they were very interesting places to go to. And it's smaller. They were here at Burlington. We got their national meeting. Burlington is the only place large enough to handle several hundred
Right.
people. And we, House member Kathy Keenan was the president of the organization. So when I started here, there was a lot of encouragement
Mhm.
to join. But it has changed, but that is there. And you will probably start getting some emails from them.
And then the NAIC, the organization I mentioned, also has for their fall meeting an opportunity for state legislative members to come and participate, and they do a whole program. So we might be reaching out to you next fall.
I did
if you want to
that
Participate.
a year ago.
Yeah. Yep.
And
Yeah.
also interesting.
Yeah. Right. So talking about how low our premiums are, but then, as I said, everyone's premiums are increasing right now. And there's several factors as to why that's happening. We actually just issued a consumer advisory on this because we do receive a lot of questions. We're trying to be more proactive about doing consumer education on these issues, because I think it's, if you're receiving a bill and you haven't had a claim, you might say, well, why is my insurance premium going up? So there's several different reasons. One I know we've all heard of is inflation, right? Prices are depending on the sector, inflation rate is different, but definitely impacting insurance costs, because as I mentioned here, when you get into an accident or you have a claim with your homeowner's insurance, the insurance company then needs to turn around and pay for those parts and those building supplies, which the costs of those have increased, as well as the labor costs to do that work. So all of those factors lead to then higher insurance premiums for policyholders. Another point I wanted to mention is reinsurance, and this kind of goes with the last point here about the natural catastrophes. So reinsurance, so insurers, while we have insurance, insurers have reinsurance. So that means that for every insurance company that writes your policy, there's another insurance company behind them that reinsures the risk. So they will say, okay, insurance company, you have a claim over $1 million, we'll insure that risk. And what that does is it mitigates the risk for the insurance company so that they can offer policies to more people. So it's a great thing. But with that reinsurance, because those reinsurers operate nationally and even internationally, when there are catastrophic losses, like the wildfires we're seeing right now, flooding, hurricane, everything, the reinsurers are then the ones absorbing those costs. And what they do is they say, okay, our risk pool nationally, internationally is increasing, and therefore we have to pass those costs on to our insurance companies. And then therefore that cost is then passed on to policyholders. So that's a dynamic I like to talk about because again, there was I think it was the Wall Street Journal article or Forbes maybe that talked about wildfire risk. And if no one has seen this, I can pass it along. But how the wildfires that are happening in California, the risk of those natural catastrophes is being passed along to other ratepayers in other states. And to kind of baseline, each state has control over whatever premiums that they approve for insurance companies to use. And this article was talking about how the high costs of insurance in those states are being passed along to other policyholders in maybe lower risk states like Vermont. We do have our share of natural disasters. We've had the flooding. We have high hail risk, but it is to some degree, insurance is a pool. So whenever you're pooling risk, whether that's at the local level or national level, there is some sharing of risk there. It's just the natural way that insurance works. But we are looking into that study to how they kind of pointed to Vermont and some other states. So we'll probably have more information later in the session on that point. So I talked about our review of premium. That's our rate and form review. So we're doing a lot right now. The past 5 years, we've set up a lot of different checkpoints along the way to make sure that when a company is coming into us and wants a certain amount of premium, we're making sure that they have the data to support that premium. And so we've implemented actuarial indication checklist, and actuary is just a fancy word for someone who can predict risk, essentially. So they look at data and say, okay, we think that claims are going to be here next year, so then we need to charge X amount of premium to make sure that we're able to pay for those premiums. We also have a legislative proposal this year, which I think will be coming to this committee on file and use. So currently, Vermont's rate review structure for property and casualty insurance generally is the company can use the premium, the rate, and then they have to file it with the department. But as I mentioned, since 2019, our staff have really been treating rate filings that come in more on a file and use basis. So this legislative change, I'll talk more about it when the bill's in front of you, is really intended to give the department the authority that it's kind of already implementing with reviewing rates before they get to market. So those are some things that we're doing to, again, ensure that, if there is any cross subsidization, it's supported, making sure that the premium it should be charged in Vermont is based on the risk in Vermont. That's something really important for our department and something we've been focusing on. Other things that have been happening in the property and casualty market, which I'm again sure you're aware of, the flooding in the last 2 years. The department has done flood data calls on the P&C market to understand how insurance companies have reacted to those floods. So most homeowners insurance and auto to some degree don't cover flood events. So flood is excluded from a homeowner's policy, but certain individuals may purchase private flood policy, or they might have a national flood insurance product or program, which is NFIP, and they offer insurance products. So our flood data call tried to capture information from our insurance companies to make sure they were paying claims on time, adjudicating claims, but also really to understand where claims were being filed and then how much money consumers were getting back through their claims. So all that information from 2023 is on our website. And then we're expecting the 2024 data, I think, in the next few weeks. So that will also be on our website. But again, we're just trying to monitor the market and understand how these flooding events are impacting the property and casualty market.
Just finish question.
Yeah.
And that is in the data that you've collected, are there any outliers or things that are screaming at us that we should try to do something about? Because certainly we've had major flood losses with these high water events.
Yeah, I think the one thing that we knew before the flood, but really came to light after we received this data, is that I think about 3% of Vermonters have flood insurance.
Mhm.
So a lot of the damages that people experience were not covered because they didn't have a flood insurance policy. That's not to say like that everyone can afford a flood insurance policy. They're from the NFIP. I think the average is between like $2,500 or $3,000 a year. But we actually had a meeting this morning with companies that are wanting to provide what they're calling inland flood. So that's maybe a smaller coverage policy, like maybe $5,000 to $50,000 that individuals can buy. Maybe they're in a lower moderate flood area, but like we saw with this summer, a lot of the damage to houses and properties were not necessarily in flood zones, at least
Yeah.
where I live in Moretown. So there are some products coming to market that we're hoping can like fill that void and also be affordable. So we're really trying to encourage that. And also, again, hoping to use the data we have to maybe provide education so that people can understand, okay, do I need flood? Not just because my mortgage company required it, but is this a risk I should actually be insuring? And can I afford it? Those are the two questions.
I think the third question is right now, in terms of what private flood insurance is available, is it something that people are buying or are finding that, well, we'll take the chance?
Yeah, I don't think people are buying in high numbers. I'm not exactly sure what the take-up rate is for private flood. I think the 3% was really tied to the NFIP.
Mhm.
So I can look into that and see, but it's much more spotty, right? It's usually cheaper than the NFIP.
Mhm.
But again, not a very high uptake rate in Vermont. One other thing I wanted to mention is with the flood data call to your question is with 2023, I think we hadn't really experienced that type of flooding since 2011, since Tropical Storm Irene. So everyone was kind of caught off guard. And I think we wanted to make sure that the insurance companies, because I don't want to get too in the weeds, but to get FEMA coverage, you need to have essentially your insurance company needed to give you something that said this isn't covered under your homeowner's insurance so that you could be eligible for the federal assistance. So part of the data call was actually looking at that and saying, okay, are insurance companies adjudicating these claims quick enough? Are they getting back to people? Are they being responsive to get people the help that they need, right? Maybe they're not providing the coverage, but they're part of the process. And what we found largely is that the insurance companies were being responsive. We had put out a bulletin that actually prohibited insurance companies in Vermont from dropping people, non-renewing them because of the flooding, and then also increasing their rates because of the flooding. So, we'll wait and see the 24 data, but I think it generally was good news. A positive note I like to highlight here is we also oversee workers' comp insurance. And I think we've had year-over-year decreases for the past 7 or 8 years. So in our voluntary market this year, we'll be seeing a negative 7.4% decrease, and in the assigned risk market, which is the market where individuals or businesses go who can't obtain insurance in the voluntary market. They're going to be in a negative 11.3% decrease. So really good results there, really positive for the Vermont marketplace. Another piece I wanted to highlight was the affordable housing and anti-discrimination proposal that will also be coming before this committee, and that it's implicit in the law right now, but we wanted to make clear that insurers are not allowed to use a business or an individual's identity as an affordable housing recipient or user. And they can't use that in underwriting, meaning they can't say, we're not going to write you because you provide housing to low-income people, or we're going to raise your rate. So that's something that will be.
And there were complaints.
There were complaints, exactly. There were complaints that we heard from hotels and motels who are participating in I'm not sure the name of the program, but who were providing housing to individuals who had been victims of the pandemic.
Champlain Valley Housing, there was the whole email thread.
There's kind of two different aspects. There was the developers of affordable housing. That was an aspect of it, but then there were also building owners or business owners who were providing affordable housing under state programs, who just wanted to make sure that them participating in the program wasn't hurting them in their ability to procure insurance.
Was that the GA housing? The folks, the general assistance?
Yes, yeah, you're exactly right. Yeah, thank you for that. And then one last thing I wanted to talk about with PNC, and this relates back to everything I talked about natural disasters and where the homeowners insurance market is. There was a PCMI, Property and Casualty Market Intelligence data call, that the NEIC did in conjunction with FIO, which is the Federal Insurance Office. And this collected data nationally from, I think, the top writers in the country. It might have covered like 80% of the market, but this was really to, again, collect data to understand the availability and affordability of homeowners insurance. So we'll be getting that. I think we already have that data, but we're learning how to use a tool where we can analyze it and really understand, again, what's happening with the homeowners insurance market in Vermont. Any questions on the property and casualty market before I move on?
I have one question. So you mentioned that premium cost, to some degree, that's reflective of what's happening nationally, maybe even globally, and to some degree it reflects the more of a local flavor.
Yeah.
Are there insurance companies that are available to Vermonters that don't insure globally that they can?
Oh, yeah. Yep, we have several regional and local carriers. Our domestic insurance companies, so
yeah,
Vermont Mutual is an example. Union Mutual.
I was gonna say several of them are in the city.
Yeah, so a lot of them are in Montpelier. In
the
this
risk
area.
is more isolated.
The risk is more isolated, exactly. Yeah, that doesn't.
Yeah.
So I think there's like, when I think about it, I think of two different buckets. There's supply chain, building costs, right? Those are national things.
Mm-hmm.
But then things that might be more localized are like hurricane risk. You know, what is the actual risk to a homeowner in Vermont? And those companies are really should be rating on what they're seeing in Vermont, what the experience is in Vermont.
Okay, thank you.
Yeah. Okay. All right, now, oops, I missed. Oh, where'd it go? Oh, there we go. Okay, well, I'll do life insurance. It's easier, and then I'll move on to health, because I think there might be
Because
more
no one
questions.
is coming in.
Yeah. Okay, yeah, so that will be a good segue into Nolan's presentation. Okay. So we also oversee life insurance. So we have one domestic life insurer in Vermont, National Life, who is here in Montpelier. So our department oversees that company's finances, our company licensing team. And what we're seeing in the life insurance market generally is increasing complexity of the types of products that are being sold. So examples of that are index-linked variable life and index-linked annuities. So these are products that are linked to the markets essentially at a high level, and the way they work and the way that they pay out benefits and their value of them is increasingly complex. I'm not an expert on this. I have staff who are, but we're seeing not necessarily an increase in filings for these types of products, but just that they're getting very complex and requiring more time to review and analyze. The chair had mentioned the IIPRC, which is the interstate, I'm going to get this wrong, interstate insurance product. It's essentially, I should have written it down. I don't know why I didn't do that.
Product Standards Committee.
It's a product standards committee. Well, we're the vice chair of the product standards committee, but the IIPRC is essentially a national compact whereby states can choose to participate. So that's actually, there's a statute in Vermont that allows Vermont to participate in this compact. And that's a one-stop shop for life insurance companies to file products. And that compact has their own standards. The states get together and set those standards. But again, we're actively involved in that, and really this compact sets standards for the nation as far as what life insurance products are out there. So Vermont is heavily involved. I have one staff member, Mary Block, who has a life background and has really been able to participate meaningfully on that committee and steer a lot of the product standard decisions. So we are involved in that. And then lastly, long-term care insurance. We oversee the products and the rates for those policies. And again, I'm sure you've heard there's affordability concerns, there's solvency concerns.
That's the one other than aftermarket parts and auto insurance, which I
Yes.
found out belongs to judiciary. They have
Yeah.
auto
Oh,
insurance.
right, yeah.
So I'm happily sending
Yeah.
aftermarket parts down there.
Yeah.
But that's long-term care is where like 100% increase I got.
Super large
about.
increases. The products were long tail, obviously, and when they were sold in the 90s and early 2000s, there just wasn't the data to accurately price them. So we're kind of seeing the results of this right now. But again, through the NEIC, we're participating in this multi-state rate discussion to understand how we can make sure the companies stay solvent, but then also taking into account affordability for policyholders. So those are tough discussions, but also very important.
It's the Insurance, Interstate Insurance Product Regulation Commission.
Thank you.
It's a mouthful.
Yeah, it is. I always call it the IIPRC, so I never have to actually remember what it stands for.
And there's several compacts out there. I remember there's credentialing compacts. So that feds haven't taken it over.
Yeah. Any questions on life insurance? Okay, all right. Now health insurance. So I said major medical because while the department oversees several different types of health insurance, so if you think about accident and sickness policies, disability policies, your Medicare supplement, which goes on top of original Medicare, we all oversee that. But I think where we're seeing the most activity and disruption is in our major medical market. What this means is if you buy a policy off the exchange, or if you have a policy from your employer, that we call that major medical insurance. So first, I just wanted to distinguish between fully insured and self-insured, because I think when you say health insurance, there's this assumption that we DFR have and oversee most of the health insurance market, and that's actually not true. So in the state regulated market, and when I say state, I mean the DFR regulated market, there's approximately 80,000 covered lives. The rest of Vermont is made up of Medicare, Medicaid, and what's called self-insured. So those are ERISA plans, sometimes they're referred to. Essentially, they are federally regulated, not within the state's purview to regulate or control. And that makes up the rest of it. So those are employers who have decided again to self-insure their risk. So 80,000 individuals in the fully insured market. And of those, you might have heard of the individual plans and small group plans. And those are the plans that are on our health exchange in Vermont that DIVA oversees.
Thank you. This is so complicated, health insurance, and I'm on my second round of, hearing this stuff, if not my third, but the fully insured,
Yes.
and then it says state regulated,
Mhm.
that doesn't include Medicare, does it not? Because
No.
that's federally.
That's federally regulated.
What about Medicaid? That's a combination of federal and state.
So Medicaid is overseen by DIVA. I should have actually, so I was talking about major medical.
Right.
Mr. Rogers commented it, but the state does regulate Medicaid along with the feds, and that is overseen by DIVA,
And
Department of Vermont Health
Bill and
Access.
Lang will be in
Yes,
after we do
Yeah, I
a
was just-
confirmation hearing to go over the health insurance.
yeah,
Right.
which is very multi-pronged in Vermont. There's a lot of different state entities that, have a hand in regulating healthcare, health insurance, but the Department of Financial Regulation oversees major medical health insurance and just part of it, because we'll talk about that. So I'm sure a lot of you are aware, we have rising healthcare costs in our state, and this has led to affordability challenges, with the cost of then health insurance increasing, and then also solvency concerns. So, we have one domestic health insurance company, Blue Cross Blue Shield, who is one of two health insurers who offers these fully insured plans. There is Cigna, but they only have 2,000 covered lives, so I generally don't include them in the mix, but there's MVP and Blue Cross, and the Department of Financial Regulation oversees Blue Cross Blue Shield Vermont. MVP is a New York domesticated company. And I think what we're seeing is the more pressure there is on the costs of care, then those are passed on then to the health insurance company to pay, and then eventually passed on to consumers through premiums, deductibles, out-of-pocket costs. So that's across the market. It's not just in the major medical market. We're seeing that in Medicare Advantage space. So we don't regulate Medicare Advantage, but some of you may be aware, we just lost several carriers who had been offering Medicare Advantage due to affordability. They couldn't operate in the state and remain financially profitable, so they pulled out. But again, just we're seeing it with the major medical. The department does not approve major medical health insurance rates for the exchange. Those are approved by the Green Healthcare Board. And as you're aware, those increases for Blue Cross last year, I think were over 20% for both markets. So really putting a lot of pressure on small businesses and individuals. And then on top of that, last session, in past sessions, it wasn't just last session, but I just wanted to highlight health insurance companies are called managed care organizations. They're supposed to manage the care that they're offering to their policyholders. And there's been legislation, not just last year, but in the previous, I would say 5 to 10 years, that have limited insurance companies to do that. So that then when a company can't manage the care of their individuals or their policyholders, that then leads to increased premiums. There's also a cost shift. So while the prices that Medicare pays to providers and the prices that Medicaid pays to providers is limited in many ways, the price for commercial insurance is negotiated between the health insurance company and the hospital. And so what you see then with this is that, as we know, our hospitals and our providers are definitely feeling financially strained in a lot of ways. And the way that they usually are able to reach whatever budget they need or to cover their costs, the area that is not regulated as far as the provider reimbursements is the commercial market. So we see a lot of the pressure that those institutions are facing being funneled into the commercial insurance market, and the cost being felt most dramatically there. And then I also just wanted to talk about stop loss insurance, which is a lot of you probably have not heard of it, but it is part of the picture. Stop loss insurance is an insurance product that employers purchase when they decide to be self-insured. It used to be that if you were a small employer, there was no way you were going to purchase stop loss insurance, right? The risk was too high. You couldn't insure the risk of your employees because you were too small. So you'd see large employers with 500 employees choosing to self-insure. We've seen a drastic shift in that market where employers with 5 employees are starting to self-insure. Using stop loss, using what are called level funded plans, which I don't know if no one's going to speak to this. I can come back and talk about this.
This is just
It's
101.
Yeah. So I won't get into it. But
We've even talked about
Yeah.
captives.
I know.
Dead.
Yeah. But the department oversees stop loss insurance. So that's something that we regulate and are planning to do a revision to that regulation this year. And then last, I just wanted to mention, there is a report coming from DEVA, which DFR contributed to, which was to look at affordability strategies to help figure out what can we do for our market. And And lastly, I just want to say too, I know I'm speaking from the insurance side of things, but this is really an all-in problem. We all, there's no one solution, right? It's not just pushing on one area, the insurance area, or pushing on the provider area that's gonna fix it. A market, and a very dynamic market issue that involves all participants in the healthcare space,
We
so.
will probably be working on health and
Yeah.
welfare with this one, like we're working with education on property taxes.
Yeah.
Because the problem has gotten so large that it's not just where you get the money.
Exactly. Yeah.
It's how you're spending it and the cost. And this building, this committee sometimes gets a reputation for killing things. We also will get bills that will come through, and yes, we should have this and the exchange should cover that. And there's different procedures, but they all add to the cost of the insurance. And at some point, it's nice that your policy covers all these procedures, but if you can't afford the policy,
Exactly.
you don't
Right. There's
get
no
anything
availability.
covered.
Yeah.
So
Yeah.
it's finding out. He's trying to find that balance.
Yeah.
And we're the only group that looks at the market and affordability, not probably the desirability
Right.
of having things.
Yeah.
So, okay,
So any questions on health insurance?
we will get,
Okay.
we're gonna get health
Okay.
insurance
Yep, that's totally
up
fine.
as soon as this year.
Yeah.
Uh,
So that finishes my presentation.
okay.
Great. Thank you for having me.
And Nolan
Appreciate
will
it.
be in today and the captives will be in next week.
Great.
The captives really is a form of self-insurance,
Yeah,
so it's
exactly.
not sold to the public. It's a group of similar, getting less similar as we go along. It's businesses, usually large ones, but getting smaller as we go along. That's about less than 5 people. And they will also, we will get them when the insurance market is hard, usually meaning expensive. And if the market softens and gets less expensive, we'll see some go out of business because it's cheaper to buy it, but it is a form of risk management, self-insurance. Okay, thank you.
Okay, thank you so much. Thanks for having me.
Karen might be in the hall. Totally running a few minutes.
Oh, okay.
And he was a few minutes early, so.
Phil's making this all time.
he's around, so.
Vacation.
This is the.
Without
Probably want to get.
So that happened.
Yeah, I might have.
Your parade is this weekend.
But
Yeah, right.
Yeah, something special for the year.
I've heard those.
Yeah.
That's right.
Before,
Yeah.
so.
Garrett's pretty excited.
Any of us, some of us heard it yesterday.
Yeah,
so-
exactly.
No, that was the health. The health care system, but also the mantra, and there's nothing cake. That is our mantra.
What is this?
Sharon,
UVM soccer game and soccer.
have a seat.
So.
We're gonna have the UVM,
This is
we're still live.
the first of our confirmations here. We do commissioners and secretaries. So it'll be 1, 2, maybe a year. But we do have important people in to talk to the committee. For those of us that have been here a while, Carrick's worn a number of hats and has always in the same area. So Carrick, welcome, and tell us a little bit about your job, a little bit about your background and why we should confirm you.
Thank you, Madam Chair. What I thought would be useful, you tell me if this meets the committee's needs, that I would discuss a bit, probably the relevant portions of my career that I think add to why I think I deserve would be grateful for a yes. And then I thought if you're interested in, I don't know, Madam Chair, how much time, but we'll see you want to spend with me. But I also had, at least now, my initial thought on my vision for where things I'd like to accomplish with the department.
We can do that.
That makes sense. Okay, well, I will say that this is kind of a full circle moment for me. My first work in the State House was working for the Attorney General's office, Jeff Amestoy, as a legislative liaison, and then during the off season as a investigator for the Consumer Protection Division. So there I got exposed to how do you defend Vermonters, and what happens when there's misbehavior and you have to prosecute them. And I got exposed to the legislative process, and that was started. I was there for 3 years, to 1985. So I would say one notable formative experience of my life was here for the Attorney General's office. One of the few non-lawyers in that office learned about what they did. And it was a real interesting experience. The other, I think that is useful, and probably what I'll do is, because there's a lot of contention and there's a lot of controversy and a lot of stakeholders, I thought what I would do is just touch on what my job was, and a couple examples I think that are relevant to where we find ourselves today. So after the Attorney General's office, I should back up and say I grew up in Barrie, School of Johnson State College for 1.5 semesters before I joined the Air Force. And my job was to fly around a plane and translate Russian. And I did that based in England. We flew in the Baltic and Barents and East-West German borders when there was an East-West Germany. And honorably discharged, came back and worked construction for about 1.5 years. So, there might be something different that maybe I can do. And that's when I met the Attorney General's office. Following that stint, I worked for Associated Industries of Vermont, Trade Association of Manufacturers. My areas of responsibility was environmental and energy. So I was there when one of the big initial Hydro-Quebec contracts, and we had a position in that. But for this committee for right now, there's 3 things I would touch on. One is the administrative penalties for environmental violations. I led AIV's work on that, and really the premise of that was violators of the law within the business community who gained a competitive advantage because they violated, they shouldn't be rewarded, and that competitive advantage should be mitigated, if not eliminated. So this created a new enforcement tool. It was somewhat controversial within the business community, but AIV and we felt this was the right thing to do. There was a lot of parties involved. Some wanted to go further, interesting. Some wanted more citizen suits, but it's maintained a governmental function. And thus far, it's been incredibly successful. It's in the tool of enforcement, and I think that has been a good thing. Another is on landowner liability. Vermont has a rich tradition of keeping lands open for recreation and the like, but there were a couple of notable court cases. This would have been in the late 90s or so, which landowners were getting sued, even though they made their land open and available for access for all kinds of recreation, when people got hurt. The thought was, how do we better protect landowners, even as they make their land open? Now, landowners have responsibility. You can't string a wire across a trail and the like, but that was a real tough one. I think the president of the Senate was Governor Shumlin before he became governor, and that was contentious, but we got to an agreement. And I think that also gives you some insight into the way I operate. The last one for AIV was a heavy cutting law, which was there were some significant clear cuts that had happened in the working landscape, and these I represented, small and medium size and some large timber sawmills and wood product manufacturers and the like, and they were concerned, but it was very divisive within the forest products community, and that was tough. But if you have the data and you understand and you go where the facts are and you're honest with people, That was tough and that led me, there were some very, very hard feelings on that. But that has continued. That's been resilient, that law. I think it's done a lot of good. The industry supports it. But at the time, that was viewed as quite a controversial measure. Then I joined Central Vermont Public Service with a much stronger really focus on energy. There we had one of my first tasks was to solve the Peterson Dam permitting issue, which was at the time, Madam Chair, yes, was the longest running permit issue in the United States for a dam relicensing. And so it was, can we get to an agreement? This doesn't make sense. So that was handed to me. And in the end, we found a path towards a resolution with environmental groups and regulators and industry and anglers. And that was a challenge, but we got to a good result. So, and CVPS, I was there for 6 years. I was asked to join Velco. One thing that's important, I think, for my position that I want to stress about Velco, really two things.
And for the newbies on the committee, what's Velco?
Thank you. I'm sorry. It's a Vermont Electric Power Company. It's a transmission only, so high voltage, 115 kV and above. That's their system. First transmission only company created in the US in 1956. That's nice, but the two relevant, I think, points for today and remain valid and important today revolve around its governance and the financial structure. And it's a unique creature in the US. And no other transmission utility in the US is owned by distribution utilities and a public benefits corporation, which Velco is. There are a couple other transmission companies that are similar in the financial structure, but not exactly the same. By that, I mean the profits Velco makes are by a combination of law and regulatory requirement, go back to the distribution utilities, the owners, but they're required, those utilities are in turn required to credit those revenues towards customers. So said another way, at the time, if I did a good job, if we did a good job, you could save every single grid connected customer in the state of Vermont money. If you screw up or you do something wrong, then you're costing everybody money. That was a powerful mission and I really enjoyed it. But I think you remember at the time, Velco was in the process of quintupling its assets and it started a project right along the Lake Champlain and some of the richest communities in the state. And we had a lot to learn. So we needed to rebuild everything, cost estimating, public outreach, everything. And that there was the project that really encapsulated that tough period was the Northern Reliability Project, Northwest Vermont Reliability Project, the NRP. That led to this body getting very engaged, putting new requirements on Velco and the distribution utilities, a regulatory process that took nearly 28 days, I want to say, of hearings at then the board, now the PUC Commission, which is virtually unprecedented for something like that. And then my task was to fix them. And the next very big project, now it wasn't along the shores of Lake Champlain, but the next big project we did that impacted 11 towns, we had less than a half a day of hearings. And we're able to do that because we met with each individual town. We made changes where we could, consistent with our responsibilities. There again, I think it's a complex issue, a lot of stakeholders, a lot of heartfelt emotion and valid and legitimate beliefs, but can we find areas of agreement? So that was with Velco. In the midst of that Velco work, my responsibilities grew to include strategic initiatives. One of those initiatives actually became a startup with Boston Consulting Group and IBM. The point was IBM had a state-of-the-art weather prediction tool. I didn't pick the name, but the name is Deep Thunder. I know. That's why I say I didn't pick the name. That's the name, like an 80s movie. But regardless, it was powerful. It's built hyper accurate weather forecasting. And this is at a time when in-state renewables were really growing. So it was, if you're an organization that Velco is concerned with reliability, having a better idea of what's going to happen to the weather that will impact solar, that will impact wind generation was really important to know. The ad of this startup was you take that as a base, this really good weather prediction, and you add analytics for solar and wind prediction. So now if you know weather, you'll have a better impact. If you know, you have a better idea what the wind speed is going to be at a wind turbine hub height. If we can have analytics that understands that and better predict, okay, here's what it's going to generate, you really can reduce the buffer zone you need in a resource portfolio. You can drive down costs for customers.
Yeah, you want to buy the cheapest electricity, and if you have to buy it off the spot market, it's expensive.
And I would say,
You're gonna learn a lot more about that.
yeah, I would say least cost is the term of art. And
Yeah.
yes, so the point was it worked. We launched a startup, Velco with IBM and Boston Consulting Group. They asked me to join them. I did. I moved to New York. I was commuting between Westchester and Vermont, which was awful. And so I left, and I'm incredibly grateful we got bought. And as a result, giving to Velco's construct, that financial system, an additional $12 million of windfall, you would say, were put into the hands that went to customers from the result of that startup. So it was a win-win. But when there's that much money watching around, things change and priorities change, and was moving away from the Vermont utilities. And my wife won Vermont utilities. I left there and went to VEIC, and I worked at VEIC for 9 months. I was working in this building, I'm sure you remember, for VEIC, primarily to look at the mission of VEIC and wasn't relevant to the day at that time.
What is VEIC? I've just got people who haven't done
Yeah, no,
insurance
it's my bad.
or utilities.
It's the Vermont Energy Investment Corporation. So they run the three, let's see if I can remember. They have three sub companies of VEIC. One's the Efficiency Vermont. They also run the Efficiency Utility in Washington, DC. They also run similar to an efficiency utility in a portion of Ohio from there. So while I was there, I helped evolve the mission, advanced legislation in this body to help them do that. But really my heart was still, I like the mission of Velco, where if you make money, it serves everyone. So Velco was happy to have me back. I was grateful for that. And there, I would say, Madam Chair, for the last 5 or 6 years, up until July 1st, I was really concentrating on what is our new innovations? What's the technology we can bring to bear here in Vermont to better lower costs, create a grid more resilient, and better accommodate policy to more in-state as well as low types of clean energy. And we found that we made successes. The other thing I was working on in this time of transformation was making sure there was harmony within the utility industry, because part of my responsibility is when you have that many distribution utility owners, there's going to be conflict. There's going to be tension. Part of my role was, okay, can you resolve? You have to deliver sometimes hard messages to people. You really need to stop that, or would you please start doing this, or that comportment isn't constructive and helpful to where we're trying to get to. And I have some examples, but I'm mindful of time. I would just say we have some notable examples, some of which have been realized. Many are still coming, which you'll hear about. You'll hear from Velco on some innovations and some work that's going on that will directly benefit from us. And I stopped full-time work at Velco, Vermont Electric Power Company, July 1st. I was working part-time, and the governor's team asked me if I'd be willing to this job, and I said, no, thank you, because over that time, I have worked, over my career, I've worked with at least, I tried to count 7 commissioners, Republicans, Democrats, at various intervals in Vermont energy policy. I know what it takes, like if you do it to do it right. I know what that work entails. But the more I thought about it, I said, there's probably 30, 40 people who could do this job. But I think at this particular point, at this particular time, an ability to bring people together, to identify the issues, to collaborate in a data-driven way, agree in principle on stuff, but find solutions that work and understand you're not going to agree on everything. And you kind of like, I guess now I think of it, kind of like the way you all are challenged to operate. And I think those kind of skills will set me up well for the task before us now. I guess it's further evidence, I would say, when I look around the halls of the State House, both legislators and lobbyists, I mean, a lot of the people I see, we started off as opponents on issues, but in most cases, they have been colleagues and friends, and they understand where we can continue to disagree, and we will. And now in this role, I have incredible well wishes, and everyone understood. Look, I know what you'll do. You'll do what you have to do, but at least I can trust that you'll try and find areas of agreement, and that's fine by me. So when I stop there, that's kind of the past up to now.
And maybe for the folks that are new.
Yeah.
What is the department, what is the mission of the Department of Public Service? I mean, what do you, what are you heading up?
Now remember, this is my 10th day.
Yes.
So I would say, I had to testify last Friday in House Energy and Digital Infrastructure. And I said, would you please just give us an overview? And I said, well, actually, I'm a little bit weak, so I don't know if that. So I would say this, I know the mission. The mission is to effectively advocate on behalf of ratepayers in all proceedings. It's to also engage in planning and design and the other kinds of and regional advocacy to ensure that Vermont ratepayer interests, enlightened interests are protected. That's why I put it.
You are the Consumer Advocate Protection Office. You're where I send constituents.
And we received them, and it's about 73, a team of about 73 people, roughly a $14 million budget, but we're also managing about 700 million in grants currently. So it's a lot, and so there's a lot on the plate. It's parachuted in on January 6th, and it's truly been nonstop since then.
Okay, committees. Yeah. Dr. Harvey.
Thank you, Madam Chair. Thank you, Mr. Johnson. It's nice to meet you. I was trying to write down all of your many varied experiences and wondered if you could provide a CV, resume, bio, something for the committee, just as a reference. That would be helpful. And I think, unless I missed something you were talking about, this would be your first time in state government, working for the state. You've worked obviously with the state. This is your first job in state government. Is that right?
Thank you for asking questions, Senator. The reason why I'm hesitant,
right, yeah.
Attorney General.
as the Attorney General's office, so
Right.
That's a constitutional office, but
Yeah, no, that's state government, but that is that was early in your career.
Correct.
This is the first time for a long time.
yes, it is.
So I guess also, since you most recently have worked for Velco and worked for some of the entities that you're now kind of, I know the PUC is more the regulator than the PSD, but you're sort of overseeing and working on behalf of ratepayers rather than on behalf of the companies or the organizations that provide the services. How do you see that shift in the work you're doing, in the mindset you have as a commissioner, and just how you're going to approach that, because it's been so soon since you've been in this other role?
That is the question. Thank you. Thank you for that. And I would say it's not as big as a leap for me. I will say it is different, and I was in a meeting and someone said, okay, thank you. And we'll also have to say there was invoked, okay, Commissioner Johnson, and honestly, Senator 60. And oh, that's right, that's me. So I would say this, a lot of times my role was to give the messages that people didn't want to hear. I mean, it happened a lot. Or everything from you need to leave the board meeting to this policy, or we really would like you to collaborate. So having tough conversations with utility CEOs, I'm familiar with that. Secondly, I think what my record speaks is that my advocacy on behalf of Vermont hasn't changed. The venues and the forums and the entities with which I did it, I think have been pretty consistent. Honestly, if I had any doubt, or if I wasn't where I needed to be mentally and relationship wise, once you meet that team, I mean, they are inspiring. They're hungry. to have their sense of service and esprit de corps rekindled, let's say, to be rebuilt a little bit in all candor. But everybody knows my strength and weakness is viewed well. He's going to be maybe too frank with you on that. So it's a fair challenge, and it's something I think I'll have to continue to check myself. I'm sure there'll be plenty of people to help to hold myself accountable. But for going right in and some initial tests already. Oh, one other one, if I may, Senator, is I know where the skeletons are. I actually spend most of my time outside of the state finding new technologies and trying to find areas in addition to strategic. And in all honesty, Vermont utilities are doing incredibly innovative stuff. When you go nationally outside of Vermont, people view Vermont as this energy innovation workbench. I know what more is possible and what we could accomplish if we work more collaboratively together and we put some of the egos in. It's not competing, but they do. Utilities can compete in the market. I know what happens. So my point is, I mean, said crassly, I know where the weak spots are. And now that I have the even more righteous cause on my side, I'm looking forward to having some of those conversations because my guess is people, if I'm clear on the ask, I think people will respond.
Okay. That's great. I just want to make sure that you in your new role, are able to shift that mindset and really just know, okay, now I'm 100% working on behalf of the people of Vermont and trying to get the best, rates and services and accountability for the people of Vermont. And those old relationships doesn't mean you want to rid of them, but that you have to use them for a different purpose at this point. Yeah.
I could not have stated it better. And I don't think this is betraying the trust to say that was maybe the governor's second question. Be sure you can have, so you are exactly right. And please, I mean, I don't need to urge you, but I'll say, hold me accountable.
But you don't need to urge me.
Or I understand that.
Been around
And I welcome that.
Excellent. Well, I'm glad to hear it. Thank you.
Okay. Any other questions, committee? Senator Brown.
Who would oppose your nomination for this guy? And why? What's the worst thing you could tell us about you in their opposition?
Can't think of an entity, but this is like one of those interview questions. What do you need to work on? What are your weaknesses? That kind of question. All right, I'll say this. I tend to be very instinctive, like that's the right way to go, and I want to move. And like I said, I came in here armed. I have 3 areas I think we should move, and I'm going to push. Between God and the governor, I think I have 2 years. If, Madam Chair, the committee of the state Senate confirms me, and there's things I want to get done because we're in a unique challenge, grid reliability, affordability wise, but we have incredible tools that we can bring to bear. So my weaknesses might be very passionate, and so we're going to go this way, and you have to stop and listen. And even though I have much experience in listening to our stakeholders, sometimes I need to be reminded that I need to be a bit more gather other opinions that might be different from mine. So mostly I swear a lot. That's something that's happened. I mean, just to be candid, if you're asked, but I'm so mindful, especially now that I'm asking the team, we need to rebuild our culture, like to come back in the office, and I have to check myself to make sure. So but in terms of like integrity, like being straight up, not afraid to work and honoring commitments and doing the like. I flatter myself to think I don't think anyone will show up, but I've learned in this building,
You never know.
you never know. I hope that's responsive to your question.
Sure it is. How do you get along with Steve Whitaker?
Well, no, I mean, actually, no, that's a really good question because if you may recall, the former Commissioner June Tierney, who was and remains a dear friend, and she could not be more supportive. She had trouble in the confirmation process and there was a subsequent hearing.
Mhm.
And I testified in support of her, which is always kind of when you're regulated.
Yeah.
But I didn't care because I thought it was hurtful and wrong, the criticism of her. And and I testified as to what I believed her strengths were. And I got that, and this wasn't the first time I got an inappropriate email from the gentleman you mentioned. And I'm going to tell you, he specifically claimed that there must be some sexual relationship between you and the commissioner. And that, look, I've dealt with that gentleman for the last 15 years.
We're on YouTube, just to.
Okay. Well, okay, thank you. Well, see, you're asking about my weaknesses. So we had a back and forth, and I just simply cut off the president pro tem at the time, Senator Balin asked, would you please proceed? And honestly, I said, look, it was done. It was like against me. I'm just going to let that go. So yes, I have great familiarity.
Okay.
Okay,
And you feel comfortable in terms of managing that because he's going to be on your doorstep, based on this.
Thank you, President. The only concern I have is gratuitous data requests and the like. That thus far, I mean, our staff, as you know, Senator, better than many, is incredibly challenged. And it's just when we get, I would describe as specious. Look, you have to remember that there's legitimate public interest, and it doesn't matter if you have a track record with someone or not, we need to respond. But there have been some that have wandered into the category of almost like harassment ask. I'm mindful of that, but we're just going to keep to hew to the high moral ground.
You mentioned the things, though, that are your highest principles and goals to achieve.
Yeah.
What do you hope to achieve in the next 2 years?
One, I think a re-energized, reaffirmed team. In all honesty, there were some questions also of me. Are you going to bring the team back? Order that. And my response was, well, no, I have to talk to each of the directors, talk to my team, see what the results of the work product has been and get a little sense of the vibe and ask. In fact, we're having a retreat March 5th. And this is one of the things that I've already asked, but I have asked. Just let me see you. Let me meet you in person. That's the way I like to operate, to do that. So one is take care of the team. They are incredible. I mean, I've worked alongside or done something in various roles for 15, 20 years. But I didn't know the skill sets, the truth, and the commitment, because to do what they do, you don't get a lot of rewards. There's not a lot of attaboys, a lot of reaffirmation. So one is really trying to re-energize the team. Two, I want to improve for the department. What data do we ask for? What do we do to manage it? And then what do we do to improve our analytic capabilities, bring more accuracy, more rigor, and hold ourselves more accountable. I also think the department has kind of let other people tell our story. So we're now, for the first time, not that it's pushing me out of the pitfalls, but how do we get our messaging out there? So whether it's social media or a little bit more access in some of the work we do, I think there's really nothing we do right now. And I think there's a need to be more engagement with the public when there isn't a specific transaction, not just people who maybe have a complaint, but how do we go find people and communicate as much as possible so they understand that we are their advocate in these cases.
okay, I'm gonna have to, do you have another question, Senator?
No, I'm fine.
We have to wrap it up because we are. Thank you. I will put this on for a vote on Tuesday unless someone would like more information. So just let me know.
And I
asked for some more
And I will-
information.
I'll send that, I'll go to the office and I'll.
Yes, that, because you will get presented on the floor, so we
Okay.
will need. I usually do commissioners, so I will need a resume. Because I didn't write all. of
No,
that.
I'll tell you what I'll do is I'll provide, this is just two page, I'll provide 2-page notes and the resume. Please use that at your discretion.
Just send it to Charlotte.
We'll do it.
Okay, we'll
Thank you.
get to the proper hands.
Okay.
Okay. So, committee work change gears again. But the exciting world of healthcare. And Nolan is here. And Mike Fisher's here. Mike, you want to say anything before we start? Introduce yourself.
I am Mike Fisher, healthcare advocate. I think that's, you'll, I think I know everyone and you'll get more.
Yeah.
I asked Mike
Okay.
to be here because in the last session, I did this in-house healthcare. There were a lot of weedy questions that you hear and he was able to come to the last one, but she couldn't come to this one because you go down rabbit holes really quickly and my depth is about, the roots aren't deep. You hit granite pretty quick.
Okay.
Um,
So he's your captive insurance company.
he's my phone a friend.
What's a friend?
No, phone a friend.
A phone friend.
Phone a friend, not a phony friend, but phone a friend.
Okay, so we have the telecommunications line set up in here. We're ready to go.
So for the record, Noel Langle, the Joint Fiscal Office. So yeah, today I did watch the testimony with Emily Brown. So I did see some of the questions and I did hear, oh, no one's gonna talk about that, or no one might talk about that. The answer is yes and no. I'll talk about this and not that.
It's relatively new stuff to anybody who has not
Yes,
served on health and welfare.
and so,
Some of us may doze off because
well,
at
I'll
least
throw
two
some
attorneys,
jokes in.
yesterday, the day before.
I'll keep it funny. If you start falling asleep, I'll throw some of my stupid dad jokes in to keep you awake. But like I said, I'm going to keep, the goal is to sort of throw some terms at you, talk about the peripheral, but I'm not an insurance executive. I'm not an actuary. So I can't, nor am I the level of depth of the folks like the healthcare advocate who live in this deep. So my expertise only goes, down to the shallow roots and not to the deep roots. So I'll answer your questions the best I can. I will phone a friend if the questions get deeper, or I'll just say it's a great question, Senator. I don't know the answer. Wow, I scared off half.
They'll all be back. I think they've just been here.
I don't blame them. Okay, so health insurance. So the first thing I will talk about is that I'm gonna have a bunch of charts and numbers. Some of them are a little outdated, and that's because I don't have the data. This is my disclaimer. Part of it, I get some information from the Vermont Household Health Insurance Survey that hasn't been updated since 2021. It is in the budget adjustment though to be updated this year. The other place I get a lot of my information is from the expenditure analysis, which is done by the Green Mountain Care Board. There's also been a little exceptional lag on that. There's usually a 2-year lag on the data, but they haven't done a new one in a couple of years. I've talked to them. It has to do with personnel and vendor issues. They're working on it. Nonetheless, some of my data, you're gonna say, why is it 2025? And why does your data only go to 2020? Nonetheless, I use it because it still makes the point. But I'll flag you data as well. By the way, this side of the other wins. So you're all here.
Thanks, Nolan.
You just have to carry extra weight.
She's a former opponent.
Thank you.
Actually, two ways to pick it up.
What's that?
We're 2 ways to get up.
What's your excuse? You're close to the door. So I'm going to cover high level market. I'm going to talk about actual value, cost sharing, out of pocket costs. I'm going to touch on HRAs, HSAs, and FSAs. Talk about risk pooling, premiums, market share, and then I'll probably talk a little bit about review and solvency, which I know Emily sort of covered. I'll probably just smooth over a little bit. So high level overview. Oh, I need to share my screen. I'm sorry. That's my fault. I should have looked at these. I'm scrolling through the things. I'm like, why don't you see what I see? Because I haven't shared it. All right. There we go. So this is a little old 2021, but the distribution probably has not changed. So we're going to be talking about private insurance over there on the right, but you get a sense 50% of our insurance market is private insurance. And I'll show you later on, most of that is employer sponsored insurance based. We also have Medicaid and there's Medicare. And then you can see there's 3% uninsured. Don't know what those numbers are today. The uninsured rate might have gone up or down, but for the most part, your Medicare and Medicaid are going to still be within 1 or 2%
And
of where it was then.
when we started, many years ago, things like Catamount Health that I read into the single payer discussions, believe that uninsured was somewhere around 7 or 8%.
So I
So
don't have that slide with me.
in that
That
area,
historical.
my memory is serving me correctly, which
I have a historical one that shows
Yeah.
the trend. I don't have it on this one. It's in my 101. And it shows how in 08 was 7% uninsured. And it was 30, so Medicare and Medicaid, and kind of lumping together and say government. And it was 30% of the market was either Medicare or Medicaid. Fast forward to 2021, and it's 45%. So in that period of time, we saw this big increase in folks on Medicare and Medicaid and a decrease on the amount of people on private insurance. I don't have that slide, but I put it in my other slides to confirm
they
your
all
point.
get tied to the demographics. As we age, we get off private and insure an employer and go into Medicaid.
There's a lot of things
Yeah.
happening. You know, you have the pandemic, there's all these
And then
things where
there's the
people.
pandemic.
So it was like to say the pandemic sort of shook up the snow globe a little bit and people landed in different buckets of where they got their primary coverage. But we're back into sort of the new normal. And we don't know what that new normal looks like. It probably looks a lot more like this. When I come back again in the next year, I'll be able to say this is what it looks like. So this is our commercial insurance market. So we have our employer-based, so you have self-insured and insured. I know Emily talked about it a little bit. I'm going to talk about it again. We have our large group and our small group. We have our individual market and we have our military. You're going to see there's a bunch of little stars next to them on the right. The stars are the areas of the state or the markets that the state regulates. Got it. So this is sort of a reiteration. So this blue sort of shows this is, and I know Emily talked about this a little bit too. This is the market for which Vermont has some control or regulatory over. So we have Medicaid, well, that's the state, right? But we don't regulate it, but we oversee it, we run it, right? But just from a state, even from a state budget standpoint, like we have influence over, we have no influence over Medicare. We have no influence over military, obviously. And the self-insured, we can't touch either because they're protected or they're covered under a different part of federal law. And obviously the uninsured, we don't regulate them because they're not in anything to regulate. So we have our Medicaid, which we don't regulate, but we have influence over. We control the state budget and through the policies of what we cover. But we regulate the individual group, the small group, and the large group. So that's sort of the sphere of influence. This is a better way, so the sphere being circled, of what we regulate in Vermont. So people say, can you control costs? Well, that's what you have control over. That's your sphere of influence.
Next question on that.
Sure.
So a notion of reference-based pricing I've read from the auditor as well as there are bills circulating. And that my understanding is that would only really apply to the state employee plan, or would a reference-based pricing as a notion also apply over what we do have influence over the light blue slices?
Reference-based pricing, and this would be more of a legal question, but reference-based pricing would probably be within your sphere of influence. I think the proposal is state employees and teachers because they want to pilot.
Yep.
So that's the proposal.
That's a proposal.
Sorry, that's a proposal.
Yeah, there's a bill that's been introduced that is about that, but there are different ways to do it. You can do reference-based pricing on any of the parts of the market that you
Have
control.
influence over.
Yeah, and I'm happy to chat with you about this.
And we will-
Potentially other proposals.
Yes,
But on that would not be able, I'm trying to understand the
Yeah.
white slice of self-insured. We have no,
Correct.
okay.
Because that's how you reimburse, and we're not the ones paying, or we don't have regulatory influence over those who pay.
Like,
That's a phone friend.
Mike has his hand up.
I think, Nolan's first response, that's a good legal question, and we really need the lawyer in the chair, but provider reference-based pricing is a type of provider rate setting, and it's not about what the insurance company does, it's about what the provider is allowed to accept. So I don't think this chart applies. I think it's regulating
Okay.
what providers can get.
Thank you for the clarity.
And we will take it up if and when the bill gets here. It's got to get through, assuming health and welfare, it might come here first, but I'm assuming it will come here if it impacts the cost. health insurance.
Sure will.
But, well, after last year, I'm not that sure. So, if it shows up, we'll deal with it.
So approximately half of Vermonters have private insurance. So that's the same chart before, but just sort of the gray side here. And then when you sort of, what does that particular piece look like? You can see 74% of them is self-insured. And then you have a 15% in the small group and 7% in the larger group. So that's of the gray area, that's that particular piece. Now the people ask me, what's that 4%? You know, and the other 4% in terms of how this chart was created, those are folks who are have insurance from an out-of-state provider. So that's how when this is charts from various surveys and stuff. So that's how they categorize it. So like I might I work for a company in Montana and I'm covered by Blue Cross Blue Shield in Montana. So that I think that's why that's in there as other. Some people ask, what is other?
In the self-insured, Emily mentioned that they were starting to see employers like with 5 employees
Yeah.
who were self-insuring and buying stop loss insurance or
Yeah.
trying to buy it. So I'm assuming that as the costs go up, if I've got 5 employees and they're all 20 something, I might figure that it would be cheaper for me
Yeah.
to do that. But I'm hoping I'll ask Emily next time she's in that we are monitoring that
Sure.
if that is a trend.
I think it's a new thing too.
I know that Medicare and Medicaid represent large chunks of this, but in Medicare, for example, I would assume a significant number of people have supplement policies that are issued by Blue Cross and MVP and perhaps others. Those are regulated too as well, are they not?
I think that's an Emily question, Emily Brown. I'm not completely sure what they do and do not regulate. I think that I imagine that they do regulate.
Yeah, because I would assume somebody is controlling Blue Cross Blue Shield of Vermont, and that again,
Sure.
maybe something we toss back to Emily because I'm not sure just what we're spending and what the regulatory environment
I
is.
was focusing on the major medical.
Yeah.
As you described
Yeah.
before, the major medical, and that's outside the major medical.
Yeah.
The stuff that most people.
Yeah, good question. I don't,
65.
I'm not the right person to ask. So to your point of self-insured and insured, difference between self-insured and insured is the basic concept of is that like insured is like what you think of when you think of insurance. Like I'm a business owner, and I'm going to buy insurance for my employees. So I'm going to pay a premium. They're going to be covered. And if they get sick, the insurance company pays the claim. I'm paying them to assume the risk. That's what insurance exists for. Self-insured might be traditionally have been a larger employer saying, you know what, pretty healthy population. We have all these wellness benefits that we do. We feel pretty good about it. I think that I'm wasting money, or I think I can get a better deal by instead of paying the insurer all of the premium, I'm going to take the risk on us and we will pay the claims if somebody gets sick. They're going to hire what's called third-party administrator. So a lot of self-insured still have Blue Cross Blue Shield or Cigna, still have Cigna card. But the difference is they're just adjudicating claims. They're just doing the claims processing. They're doing the admin. But the claim itself is being assumed, the risk is being assumed by the employer rather than the insurance company.
The base of insurance is the pool
Sorry.
and the health of the which is the breadth of the people that are insured. The bigger your pool, the more your risk is spread.
Yeah.
Vermont's a small state, so we start out with everybody. We'd still be a relatively small insurance pool. And that's what they're trying to find is a healthy, low risk pool.
Yep.
That 5 guys that are 20 something and invincible will work until one of them wraps his motorcycle around a tree.
Mm-hmm.
And then it can get pretty expensive.
Yep.
Pretty fast.
Yeah. So it's usually a business decision by the company saying we think it's cheaper or less of a risk for us to take it on versus no, our business is coal mining. Yeah, let's buy an insurance policy. Versus like our business is aerobic instructors, yeah, let's try being self-insured, right? That's an example my predecessor, Steve Capelli, used to use about the pools.
Yeah.
Right,
The small, talk about small businesses, small group, they're all cool, but they're just smaller employers. They aren't big enough.
Yep.
To self-insure in general. And
But
then
they
we
might
have
feel
the
like-
individual pool.
we're a young group, nobody has kids, let's self-insure ourselves. We don't know what their business decisions are. But in short, small group, individual, large group are part of the insured market. And self-insured are folks that decide to insure for themselves. As I discussed, the state does not regulate self-insured. So we have our small group and individual market. So the individual market is about 34,000 people. That's just from June 2024. 82% of the folks on our individual market are receiving state and or federal premium tax credits. So for federal tax credits, the limit goes a little bit higher, but for our state premium tax credits, it's up to 300% of federal poverty, and the state is paying using our Medicaid to cover that cost. The other 6,000 folks are full cost or direct. They're just paying for it. Their income doesn't meet the thresholds, so they're paying for it out of their own pocket. We have 36,000, almost 37,000 folks who are on the small group plan. Small group is defined as up to 100 employees. And then we have our large group, which is not in this chart. That's basically plans that are at least 101 or more employees. And these are folks that are big, they're a larger group, but they're not self-insured, they're still buying insured. This market has gone down. Someone asked the questions, what did the market look like before? What did it not look like before? Let me just show you something really quickly. Because I thought this was an interesting slide. I kept it up. Share again. This data is a little old, but it begs the point. If you look at the number of large group in 2013, it was 116,000. Look at it in 2020, it's 17. Wow. You look at the number of self-insured in 2013, it was 157,000, and in 2020, it was 200,000. Not saying all those people are going from one to the other. The point I'm making is the market is shifting.
Yeah.
And why that is, we can speculate, we can make assumptions, but we don't have all the data. And we don't know what this looks like today, because that's 5 years old. But I wanted to make that point. Someone asked the question before in healthcare, and I looked at it, I was like, wow, that's really interesting. Let me go back to my other presentation now. If I can find it. There you are. Oops. All right, I shouldn't have so much dead space and time and start falling asleep. All right. Can't talk about the large group market and the small group market without talking about the health benefit exchange, or otherwise known as Vermont Health Connect. So this was established.
Obamacare.
Yeah. This was established under the Affordable Care Act. It's an online marketplace for individual and small businesses. We call it Vermont Health Connect. It is administered by the Department of Vermont Health Access. So you don't have to buy your insurance through this. If you're not receiving a subsidy, you can go directly to the insurer and buy it. But most people go through the exchange to see if they are eligible for a subsidy. If you go directly to the insurance company, they're not going to tell you if you're eligible or not. They don't have the systems. So most people go through Vermont Health Connect even if they don't get subsidy. So we're going to get a little bit deeper. Actuarial value. So actuarial value, you probably have maybe in other areas, it's a basic insurance concept that is not specific to health insurance. It is specific to insurance. And actuarial value is the average share of medical spending paid by a plan for a defined set of coverage, set of covered services across the population. So you'll hear at different levels, 70%, 80%. So example, 70% actuarial value means that on average, the plan would pay for 70% of the medical spending with covered services. Those are the things that are covered within the plan, because the plan will tell you what their defined benefits are and how much the beneficiary would pay, which would be the remaining 30%. And that 30% is out of pocket in the form of deductibles, co-pays, or co-insurance. So in short, it's this whole formulaic thing that is it's not that clean, but it basically that determines your deductible, your co-insurance, your co-pay, and the whole formula basically is designed that you be within 70% of your your spending across the population would be covered by the insurance, and 30% would be your out of pocket. The Affordable Care Act established these things called metal level. So it's basically they assign colors to these actuarial values, and then they assign the subsidies and stuff to these colors or to these metals, whatever you want to call them. So bronze, so they're all like in a range. Bronze is 58 to 62, silver is 68 to 72, but essentially it's bronze is 60, silver is 70, gold is 80, and platinum is 90. And in theory, when your metal level or your actuarial value goes up, your premium usually goes up too.
Yes.
So usually there is we'll point out that there's a small exception. But yes. So when we talk about cost sharing, we're talking about, the cost that somebody would pay. So you have your deductible, and I think everybody here knows what a deductible is. You have your co-insurance. I think everybody here knows what a co-insurance is, and I think everybody knows what a co-pay is. I'm not going to go into those. But this is an example. So these are the 2025 standard plans on Vermont Health Connect. Now, on Vermont Health Connect, there are multiple bronze, silver, gold, and platinum plans, but these were the standard plans. And so I just use this as an example to show you that you have your medical deductible, you have your out-of-pocket. You can see they have this whole formula, like how much is your out-of-pocket max, what are you going to pay for drugs? But if you notice, if you look at the deductible, the bronze, 6,500, silver goes down to 3,500, gold goes down to 1,400, and platinum goes to 450. So you can see as the metal level goes up, the deductible goes down. But if you look down below at the premium, traditionally, the premium goes up. You'll notice, however, make things more confusing because this stuff is always fuzzy, that the gold is actually cheaper than the silver. And that has to do with silver loading. So that has to do with this thing called silver loading. We're not going to get into it. Please not. What's that? You will get into it.
We do to increase the federal subsidies, right?
Yes, essentially, and I'm going to do very high level. Basically, the Affordable Care Act had this thing called cost sharing reductions. And this was something to help folks with their out-of-pocket costs. The federal government, I believe it was under the Trump administration, decided they were not going to pay for this anymore, but didn't take the liability away from the insurance companies. So basically shifted the cost to the insurance companies. So, because they were paying for it before, just like they were paying for the subsidies. So the insurance companies, actually, people got creative and said, let's take those extra costs. Let's load it into the silver plan because that's where all the premium tax credits are. And so essentially it was a way to get the federal government to pay for that increases anyway. So I don't want to get too much into because it gets really complicated really fast. But
Can I just say?
Please.
Yeah.
By the way, Mike Fisher, healthcare advocate, and Tim said it earlier. That's chapter 1. There's a chapter 2 that happened this year, and I will tell you more about it later. But we went another step this past year.
Yes, just remember silver loading.
But traditionally-
Like Metascan.
But traditionally, actuarial value goes up, premium goes up. Or premium goes up, your out-of-pocket goes down.
It's where you're gonna pay, it's just when and where.
I was like, do I not bring it up? Do I bring it up? But then I realized if I didn't bring it up, you'd be like, wait, you said that gold is cheaper than. So I wanted to make sure there was like, you remember, but Nolan said there was an exception.
So
Oh, that's the exception, okay.
why would anyone choose gold? What's the,
So how do I say this? I know Mike's itching this, but in short, now with the silver loading, the premium for gold, even with the subsidy, still might be cheaper.
Okay.
Long story short.
Because we're covering more things in silver, we put them. The things that were formerly subsidized by the feds, and they stopped subsidizing the services.
And the other piece too is that you can still be on a gold plan and get a subsidy. But you're gonna only get a subsidy up to the value of the subsidy you would got in a solar plan, and then you have to pay the difference. So you might be someone who says, you know what, I'm willing to pay the difference because I have a sick kid. Right? Or I have a heart condition. So I would rather pay more in my premium, even with my subsidy, to offset my out-of-pocket costs later on. So people make those decisions all the time.
Do we set these co-pays at 40, 20, and 15 on the Vermont Health Connect? And if so, how long have they been at those?
So the insurance companies set them,
Okay.
but the Green Mountain Care Board approves the benefit plans, right? The structure they do a rate review. And part of the rate review is the benefit structure, right? So they don't go through and say, oh, that should be 20. They might say, you know, the way you have your setup is it's not equitable or it costs too much. And then the insurance company might say, okay, maybe I'll raise the premium, you know, I'll pay here. It's this little thing where you're always turning little knobs to get to where they want to be. And that's why they'll have different plans. They might say, I have another plan that says, you know what, I'm gonna still plan as bronze that has a higher deductible, but lower in something else. And someone might say, okay, well, it's got lower drug copay, and that's important to me because I don't get sick here, right? So that people will buy the plan that fits them, and there's different knobs. So this is just one example. Or they might just be built to have an HSA or an HRA, which I'll get into in a minute. So they might have a higher deductible or a lower deductible, or, you know what I mean? They can turn the knob.
And we add services that have to be covered somewhere. And there's a federal list, right? And if it's on, it's,
You're thinking the qualified health benefit?
yeah,
Yeah, so there's it's a parameter and we decided what that parameter would be. But the point I'm trying to make is that actuaries to fit within each of the different, they can move numbers around and say, okay, we're going to increase the copay here and decrease the copay there, or maybe we won't cover transport, like, you know what I mean, like things that aren't required. So they'll have multiple bronze plans and someone will buy the one that suits their specific need.
When we're not on YouTube, I'd like to ask Mike some really dumb questions about this. So.
okay.
There's no dumb questions. Or they're all dumb because you have to ask it all.
On this one,
Yeah, there's no dumb questions in healthcare.
it'll get kind of fuzzy 5 minutes after you hear.
Speaking of fuzzy, I'm about to make it fuzzy.
Okay.
So, out-of-pocket costs. So I was that? We do the Joint Fiscal Office does the basic needs budget report. And I do the healthcare piece of that. And when we're doing it, we say, okay, what are people's premiums on average? What is the average out-of-pocket or median out-of-pocket cost? So I did this analysis over the summer and I was fascinated by it. So I threw it in here because you always think about how many people have how much out-of-pocket cost. Bless you. So this is for people who have private insurance and have a full year of coverage. So this doesn't include partial year. This is people with full year, 12-month period of coverage. For an individual plan, the average out-of-pocket, so for an individual plan, 30% of people had no out-of-pocket costs. You might have had a claim, but they didn't have any out-of-pocket costs. And for families, 4%. 38% had less than 100, 49% had less than 250. The median was 260. And then you can see 29% had over 1,000, 11% had over 2,500, 3% had over 5,000, and less than 1% had over 10,000. Right. So this gives you a sense of the out-of-pocket. Now, of course, the very few people that had over 10,000, that's a lot of money. So I'm not trying to diminish that. I'm just trying to point out the distribution. But so that's the out-of-pocket cost. However, it does not take into account HSAs and HRAs. Because if an HSA or an HRA pays your out-of-pocket cost, it shows up as an out-of-pocket cost. So with HSAs and HRAs, which I'm about to get into, your employer might be putting money into this health savings account. And then so really the out-of-pocket cost is being paid by your employer. Now, I'll get into that in a second, but let's talk about what they are. And then
Out-of-pocket does not include premiums.
Correct.
Okay, got it.
The way I think about it or describe it is your premium level determines your out-of-pocket.
Okay.
So the check you have to write before you get to see the doctor.
Yeah.
Yeah.
So HSA is health savings account. HRA is a health reimbursement account. And these have increased significantly over the years. It used to be a smaller percentage. They're higher now. According to the 2020 Vermont Household Health Insurance Survey, 34% of people had an HSA, 13% had an HRA, and 9% had both. These numbers have probably changed, but the point is that when you have an HSA and HRA, it convolutes the numbers, because if you have an HSA, let's move into that. So, sorry, HRA is an employer funded account. It's notional. So, and it's entirely funded by your employer. So what happens is we've seen a lot of smaller businesses doing that. They used to have a plan where they had high deductible, business, maybe they had a plan with a $1,500 deductible. And they're paying the premium on it. Well, what they did, what a lot of people did, they said, you know what? We're going to move into a plan that has $3,000 deductible. So it's cheaper for me, but I'm going to have an HRA that covers the first $1,500 so that the employee still has the same liability. The difference is that if they do not spend the money, I never spent the money and I'm not paying for that liability. The employer keeps the money. So that's the sort of the game that they're playing, saying, I'm taking the risk that people are not going to spend that deductible and I'm going to keep it versus paying the insurance company just in case they do pay it. So that's the HRA. That's the sort of game that employers are playing. Do I do a self-insured plan? Do I do an HRA with a, HSA is a tax advantage for individuals who are covered under a high deductible plan. You have to have a certain kind of plan. It can be funded by an employer or employee. But in the end, the employee gets to keep the unused money. So employer or the employee puts $1,000 in it, and you don't use it, it carries over. So employers tend to like HRAs because it's notional. I'm not putting money in an actual account, but I'm on the hook, right?
But I know what I'm on the hook for.
Exactly.
Can I ask how many, just sorry to interrupt, how many pages is this presentation?
Getting close.
Okay, I was just curious, because I'm trying to focus.
34.
But I was wondering how long.
What she's saying is, I'm trying, but I'm not succeeding.
Well, we're a little more than halfway, but some of the slides will move through quickly.
Okay, great, thank you.
If you want, I can sing it.
No, I'm good, I'm just trying to pace myself, so.
Okay, I'm just trying to think of ways to keep you engaged and awake.
There is a song about the elements, right?
Mhm.
Yeah.
I got you, Senator Billick, I got you.
We're over halfway, okay, thank you.
Yeah.
Senator Chittenden has a question.
HRAs, HSAs, and the FSAs in the next slide, federally regulated, or does the state play any role in setting any of these parameters?
I don't know that. Great question. I'm not familiar with, Mike might know.
IRS.
Oh, that's
We have
right.
no say and influence over these things. We're just adapting. Okay, thank you. Yeah.
Thank you, Mike. Then FSA is just a flexible spending account. It's set up by an employer or employee. It's just one of those things. I'm going to put money into it. I can use it to pay for dental, pay for whatever. It's just these sort of pre-tax dollars.
And it's limited.
So, and then it's like a little hefty chart. I just sort of, I just found this online and I put it in because I assume that everyone always goes back and looks at my presentations multiple times throughout the year to remind them of what a good time they had in my presentation. I'm trying here. Okay, risk pooling. This is a very important part of health, of insurance in general. This is what Senator Cummings was talking about. Groups of individuals whose medical costs are combined to calculate the premium. So risk pooling is a fundamental concept. This is the idea that the bigger the pool, the more people you have paying into it, the safer that's, and so that's why there's all these little things. So for instance, you have community rating, and that's when health insurance providers are required to offer health policies within a given category at the same price to all persons regardless of their health status. That's a way to sort of keep the pool fresh. So it's not saying you're healthy, you're in, you're not healthy, you're out. We can't do that.
You're 21 and don't smoke and you get a low premium than someone that's 45 and has smoked for 20 years. And
No, we can't do that because of Obamacare, right? Before
Well,
that,
that is before then.
the pre-existing conditions that were.
So we're gonna get to that in a second too. Then you have guaranteed issue, and this is when a policy is offered to any eligible applicant, again, without regard to health status. And then, as Senator Cummings said, in general, the larger the pool, the more predictable and stable the premium is. However, a larger risk pool doesn't necessarily mean lower premiums. And the key factor is the average health costs. So, this is where we get into risk pooling. So, Vermont was only, well, I'm going to jump to adverse selection for a second, because this is where pre-existing condition comes in. So it's this idea that an insurance that when an insurer contains a disproportionate share of unhealthy individuals. So this is the idea that this is where pre-existing conditions come in. You know, a common example is when people are allowed to wait until they know they are sick and they need healthcare, and then they go out and buy it. So this is that idea that like, I'm going to wait till I'm sick and then I'm going to buy insurance. That's why you have open enrollment periods. That's why there's protections. The Affordable Care Act originally had put in a tax penalty if you did not have insurance, because they don't want people to wait. But this is where the pre-existing condition comes in, right? It goes both ways, you know, where they don't want people to be like, oh shoot, I'm sick now, then I get insurance. What it does is it protects the pool from people coming in after they're sick. The flip side is that sometimes people lose their insurance for whatever reason, and they have a pre-existing condition like cancer, and they get new coverage, and they say, sorry, we're not going to cover your cancer, or you're pregnant before you got the insurance, sorry, we're not going to cover your pregnancy. So it can help the pool, but it can also be detrimental to specific individual situations. So, but the idea, so there's all these things in place that are trying to protect the pool from, you know, people waiting till they're sick to getting insurance.
And we dealt with that last year with the Medicare Advantage plans and why you couldn't stay on those and then decide to come back to regular Medicare because you waited until you were sick and got denied under the Advantage plan and then came back to regular, and it was that adverse selection.
We could come back to that, actually, because we didn't solve that problem.
Well, no,
It
we
was
did not
asked
solve
for.
the problem.
Yeah, and the flip side of that is there are people who get caught into it
Yes.
without their unintentionally, and it's detrimental to their personal situation. So I'm not going to paint that as a good thing or a bad thing. I'm just saying this is a method that's used within insurance.
And the people that get caught are the ones that call us.
Yeah. So Medicaid has a lot of churn. We call it churn. People come on, people come off, people come on, people come off. Now, the flip side is Medicaid doesn't have any premiums. And it's rolling. But we see people come on, then they don't kind of come off the rolls, then they get sick, they go to the hospital, they get back on. That's the way the program is designed, but it's also very expensive, right? So, but when people come on, people come off, it's churn. So,
That was a great yawn.
Sure.
Trying.
During through, hey, I love coming at the end of the day on Friday.
Yeah.
Thanks, Senator Cummings.
I tried.
Yeah, then we have this thing called risk adjustment. And this is an affordable care thing. And basically, CMS, which is the Center for Medicare and Medicaid Services, collects funds from insurers who enroll more low-cost health people with low-cost health. More low-cost health with people, distribute them up to insurers who have more high-cost people. So for instance, in the exchange, we have two insurers. If all the healthy people go to one insurer over the other one, their experience is going to be better. So their premiums are going to be cheaper. But then as their premiums are cheaper, more people in this pool are going to start going to here, and it's going to create a spiral. So this idea of risk adjustment is these guys have to pay these guys some money to kind of help level the field a little bit.
And isn't that what we were seeing before we went to community rating meeting? My son was going backpacking. He's 20 years old. Was $300 for 6 months worth of comprehensive medical insurance.
Yeah.
Had to come back here in 6 months and renew it. He had to be in the States. But when he turned 45, that 300 would suddenly be 30,000 because it was based on his individual risk. And we said, you know, the cost went up when you needed it most. So we pulled it and said, you you need to have the healthy 20-somethings in there paying in. So you can keep the premium for the less healthy pick an age.
Couldn't keep you, huh?
In general, everybody's keeping it low.
Universal health insurance.
I'm trying it out by 3:30. All right.
I'm working on it, We're getting there, we're getting there.
That's good stuff. I agree with
Okay.
that.
So factors that affect premiums. So this would include projected medical and pharmaceutical costs. So this is what you think your claims are going to be. You have the expected insurance in the risk pool. So who are the people? Are they sick or are they healthy? You have your admin. So that's product development, sales, enrollment, claims processing, customer service, contribution to reserves, dealing with the Green Mountain Care Board, like that's all administration. Then you have your taxes. This is your favorite word in this room, assessments and fees, because this is what you do. Example would be there is a claims assessment on all claims that insurers pay that go into the general fund, or somebody goes to the HIT fund. You have your plan design. So again, that was the standard, does that have a high deductible or does that have a low deductible? And then your market competition. Like I want to make sure that I set my premium in a way that's competitive with my competitor. Because if it's too high, I'm going to lose everybody. So they have to take all those things into consideration. And I found this cool chart online that sort of lays out what's in a premium. It shows how much is for ad. Now this is national. This is not for us. But what did they say in that was medical loss ratio. I forget. That was a different percentage. So this is just a slide that I found online. This is national, so it's not Vermont specific. But you can see like admin was $4.30, 4.3 cents of a dollar. These are all percentages, right? To the dollar prescription drugs, inpatient, outpatient. So again, this is just kind of a sense of like, what are the things that they're thinking about when they set, when they're doing insurance, percent of premiums, this is where the dollar's going on a national average. Then there's this thing called medical loss ratio. This is what I was talking about before. This is the percentage of premium an insurer spends on claims and expenses. So the Affordable Care Act made it clear or required that insurers cover individuals and small businesses at least 80% of their premium income on healthcare claims and quality improvement. Then the remaining 20% can be done on admin, profit, etc. So we heard from Blue Cross Blue Shield earlier that they're at like 6% of it. So
Like 2 or something.
yeah, so they have a very high medical loss ratio that's well within this range. In short, they're not spending as much on profit as other people are, but there is a requirement and they are regulated. And if they spend more than that, then they have to pay it back to the consumer. Market share, we're getting close, I promise. So Blue Cross Blue Shield, this is an older number, but I think it hasn't really changed much. Blue Cross Blue Shield has the largest share of our major medical market. It's 60 to 70%. MVP is the second largest, they're around 35%, and then Cigna is the third largest, is about 5%. Blue Cross Blue Shield, I think Emily said this also, is the only Vermont-based health insurer. And it's actually in statute. It's not called Blue Cross Blue Shield, it's called, I don't know what it's called in statute, but there is language in statute that sort of creates, what's that?
Hospital service organization.
Yeah, hospital service organization, an older language, but it is Blue Cross Blue Shield. We might have a reference statute for anyone when they definitely go back and read this presentation over and over again at home because they're fascinated by it.
I find all the links to.
You should. So Green Mountain Care Board does the health insurance rate review. Department of Financial Regulations does the solvency. Again, the blue is the segments of the sphere of influence of the market of the areas that we regulate or a state regulates, and the rest that does not regulate in terms of the private insurance piece. So the Green Mountain Care Board, the way it works in the process, there's a filing, there's a public comment period, there's an opinion period, a public hearing, and a decision. They have to meet these certain criteria, and this was all established in Act 48. I won't get into the weeds on it, but the Office of Healthcare Advocate is has party status. So it used to be when these hearings were in public, the board, Green Mountain Care Board would be up front, the insurers would be on the side making their case, and then Mike Fisher and his crew would have an opportunity to sort of grill the insurers about their stuff. And and ask questions. It was kind of very,
And still do though in a virtual fashion.
in a virtual fashion. But they have an opportunity, sometimes to hire an actuary, their own actuary, sometimes they hire other ways, but they have an opportunity to sort of challenge the assumptions of the actuaries. Then we have our solvency. This is stuff that Emily Brown talked about. DFR looks at the solvency, it's their goal, it's their purpose. And you have to look at the reserves. And so in each of these filings, they have to submit a memo saying, we think that the Blue Cross Blue Shield is able to pay their claims. Or they have to say, we have concerns that they will be unable to pay their claims, and we recommend you put X amount more towards reserves. And then here's a glossary of useful terms. I'm going to go through each of them individually. That is health insurance 101 for now at the high level. We did a wonderful job. Thank you.
So do
Yeah,
you know,
That you did a great job on. I didn't know these people were leaving early today.
I told you I was leaving early and I stayed.
So you
Because I guilt-
might have.
I did.
Yeah.
Half an hour ago.
So we are 10 minutes early. And should thank you, Nolan. Yes.